Hey, Happy New Year, everyone. This is Trader Tim from EminiMind doing the annual trade recap of my trade statistics. So, we're going to run through a bunch of trade stats and things from all of my trades from 2024. And I've got a whole bunch of notes that I made that I want to cover and different things that I think you'll find interesting and you'll be able to apply to your own trading, or at least be able to compare your trades to mine from this last year. So the place I want to start is kind of a newer tab that I made in my Excel log, and this is just a combination of all three strategies and their weekly results. So the halfway backs, the 1 minutes, and the 15-minute opening range breakout. So I've got this just basic Excel tab, and I've got each of those broken out. So the halfway backs for each week, and then the 1 minutes, and then the 15 minutes. And overall, if I scroll down to the bottom, overall it was a really solid year. From the combined performance was very consistent. Just over your 50K. That's for essentially for one contract. There's the first part of the year I was using on the halfway backs. I was using a first target. And so these are first target plus the runner. So that's two contracts. And then the second part of the year, I did away with the smaller first target. And so the second part of the year, I just doubled the runner in the log here so that it stays consistent at 2. So the halfway back numbers are with 2 contracts. The 1 minutes and the 15 minutes are all with 1 contract. So by and large, just over 50K for, we'll say 1-2 contracts, your $1,000 a week. So pretty consistent performance, that I would typically see. This year having all three strategies, and I've been doing that for a couple of years now, the halfway backs, the 1 minutes, and the 15-minute. This year there was 1 week in September that was kind of the largest down week that stood out. Everything else was pretty tepid as far as down weeks go. You can see them in red, and they do happen, but they're interspersed with solid up weeks. And then really the start of the year was kind of the slower time. We did have some really big up weeks in the beginning of the year, but that's where we had these back-to-back down weeks and then another one here, and then kind of that was mid-February before we really started getting on a roll. So the combination of all three strategies has worked really well. You'll notice there's a lot of dashes or holes on the halfway back strategy, and we'll get into that this week, or this video here in a minute. The overall, as far as points are concerned, the 15-minute and the 1 minute have been yielding the largest average weeks, but that is a little misleading because I didn't have very many halfway back trades in the second half of this year. Part of it is because I'm taking more 1 minute setups. The other part of it is there just haven't been as many halfway backs this particular the last 5 or 6 months, and that's not a for everything. It's just a low volatility, strong bull trend thing. And it will change. Volatility has been very low this year so far, and we will probably see that increase as we get into 2025. So we don't want to get too comfortable with this environment because it will change. So moving over, we'll go through each of the three strategy tabs, and the halfway back, so the retracements, like I said, I didn't have very many trades in the second half of the year. So for 2024, the average was only 15 points per month, whereas if we go back to 2023, 30 points, 47, 46, and then 2020 was 65. Part of that is I'm not trading quite as much as I used to. Every year I seem to trade slightly less. You can see the number of trades, 18 per month, and then down to 15, 11. 7 last year, and then this year only 5. So again, that will probably go up in 2025, but that definitely played a role in why, you see this the first part of the year much bigger average points per month. And if you combine the halfway backs and the 1 minute, so the 1 minute was right about little over 35 points average. Well, when you combine those two, now you're up at 50 points, and that puts you right back, where I would have been in 2022, 21, when I wasn't trading the 1 minute as much. And so that's, we're in the ballpark of what we've seen in the last 4 or 5 years. So average win rate was 61%. That's right in line where it typically is. The R multiple, a little bit on the low side, usually closer to like 1.8 or even above 2. But this year I was down closer to 1.5. And again, lower volatility, fewer trades, not as many opportunities, and it just kind of all accumulates together into smaller outcome of points. So that's where the 15-minute or the halfway backs. I don't have a lot to say on that. We did talk about just using the runner and not using the first target of 3 points. And what ends up happening is that you'll get let's see here. So if you get a 6, 7, 8, 9 point runner where you're trailing your stop, instead of taking one contract off or half of the position off at 3 points and then using the other half of the position to have as a runner, you would just end up with 2 runners. So you're going to end up with some trades that are, come away with a point or so, 2 points, where you're just trailing your stop and you get taken out for that small profit target. But then those bigger trades, 9, 10 points, you walk away with a lot more profit. So it is more profitable to do it that way. And, you can you see all the holes from pretty much summer on, whereas the start of the year, if I scroll back down to January, a lot more consistent day after day, and a lot bigger moves too. 15 points, 11 points. Whereas this fall it was very slow. So that's the halfway backs. Moving to the 1 minutes, as I mentioned, a lot more trades. So the number of trades was higher, and the average points was higher. But you can see a drop in the fall as well. September, October, December, pretty low average points compared to the start of the year. If you exclude January being a scratch month, pretty solid average points. And then this fall, it's been much, much quieter with the point return. A little bit lower winning percentage, 55%, but the R multiple being 2.5, that really helps bring up that profit factor in your expectancy in a way by having a larger winner as it relates to the loser. So not much changing there. Using the trail stop on the whole position is, again, a really good approach. If you want to use like a 6-point target on the 1 minute and try to kind of gain some traction by knocking off a handful of 6-point winners to build up your account, that can work really well. Same with the halfway backs. Setting a 8-point target, like a 4-to-1 target, does work pretty well to get out at kind of the peak of the profit on the trade. And you just want to make sure you're not using a 1-to-1 reward to risk, where you end up using a 2-point stop and a 2-point target. It might feel like, oh, cool, I got a bunch of winning trades really quickly, but you just end up treading water and not really building up your account. So not a whole lot to say about the 1 minute. I have traded it a lot more this year, and I'm using just a flat 3-point stop on the 1 minute and then trailing each candle thereafter. Moving over to the 15-minute, this is the one we've probably spent the most time in the Tuesday live sessions talking about tweaking or looking at ways to possibly tweak. And so I started out the year, as I've done the last 4 or 5 years, just putting my stop outside of the entry candle. So if the candle is 7.25 points, then 1 tick to get in, 1 tick to get out, and so you end up getting taken out for 7.75 points. If the first 15-minute candle is 11 points, and it ends up getting stopped out, you'd be 11.5 points. So much bigger stop outs doing it that way. That does work really well. However, the last couple of years, just using a flat -4 stop worked even better. Makes sense. Low volatility. You don't need as much wiggle room. With a 20-point target, it still gives you, it does give you much bigger R multiple and a very good reward to risk. So basically a 20-point target, 4-point stop, set it, forget it. If the first direction stops you out, take the opposite direction. Pretty cut and dry. The other thing we looked at, so yeah, you can see, start of the year, pretty dreary first month, and even in March as well. But then the rest of the months were positive, and a strong closeout in the end of the year with October and November. And so that was really helpful to kind of bring up the overall P&L. The winning percentage isn't as critical because you have a large profit target, but 40%, it's still in that ballpark of 40 to 60% that we kind of try to shoot for. And right about 14 trades on average a month. So if there's 20 trading days, you're taking it 3/4 of the time. And then the opposing, obviously there's going to be a lot fewer because if you get a +20 hit, then you don't take the opposing. A couple things that we talked about that were worth considering. So I've got another log here, or not another log, a different tab of some different scenarios. And so this is really, you can kind of ignore everything else and just we'll focus on this row here. So we've got the opposite trade should always be used with a -4 as your stop. You don't want to use the full. I switched that this year instead of using the full on the first break and the full on the second break, because if you end up with 2 full stop outs, they can end up, that can end up getting pretty big. So a -4 is enough for that opposite break if you take the opposite. The trick with the -4 is when volatility does increase and we get up to 25 or above, that's when you really want to switch to using the full stop to give it more wiggle room. So use the full candle if the VIX is trading at 25 or above. And if you do that, you can come out, look at all 3 of these for the last 3 years, I think I've got tallied up here. They're all within 20, 30 points. So 1870, 1890, 1910. So whether you trade the full candle all the time or whether you do a -4 all the time except for when the volatility kicks up and it's above 25, then you go back to using the full, you basically end up with the same outcome. And that's important because you want to be able to stick with your trading plan long enough to see the profit from that. If you're bouncing around, then that's when it starts to work and you've already jumped ship and you're trading something else. And then the third thing we looked at, or that I looked at, was I'm only trading gap days where we don't fill the gap in the first 15 minutes. If you traded it every single day, and that's using the -4, and then if the VIX is above 25, using the full, well, you end up right about the same as well. So using the last 4 years, we had a lot higher volatility, especially in 2022 and part of 21. And so you need the full candle on those times. And, 25 is a nice threshold. If we're above that, it's certainly going to be a much more volatile market than if we're down in the teens like we are right now. So you can stick with trading the full on the first break all the time, using the full 15-minute candle, and then -4 for the opposing. Or if you want to switch to -4, like right now when volatility is low, you can do that and then just bump back up to the full when volatility picks back up. I don't see myself, I mean, I'm sure it would be fairly easy to automate this and trade it every single day and just have it set up, where you're not even needing to actually put in the orders on your trade ladder. And you in doing that, you could trade it every day. I like sticking to the gaps just because it eliminates some of the drawdowns that you receive, even if the outcome is larger. There is some benefit in having lower drawdowns along the way, and so that's a big something I really pay a lot of attention to. You'll notice, like here, max drawdown on the 15-minute, it's pretty large relative to our the other two strategies. So 70 points was the worst drawdown on the 15-minute, whereas on the 1 minute you're talking 10 points, and on the 15 or the halfway back you're only talking 12 points. So at the end of the day, the largest profit outcome by the end of the year is what we're shooting for. But if you lose January through November, and then one trade in December makes your whole year, that's pretty hard to stick with for an entire year. Most people would lose, get up to, August, September, and then throw in the towel, and then never be trading that strategy come December to reap the benefits. So I prefer to kind of do things that maybe aren't quite the most profitable outcome at the end of the year, but give me the smoothest P&L over the course of the year and the relatively the lowest drawdown through the course of the year, so that, you're going to have periods where you might have a week or two where, it's a down week, but you're sandwiched with positive weeks, and those positive weeks are much larger on average than your down weeks, and you're not going to be wiped out by, one bad week. So if we take, my worst week from this year, 80 points, we'll call it, there are, plenty of average weeks where you're at 40, 60, 60, 50, and, you're kind of quote unquote making back that worst week and then some with, just a couple of, average weeks. And so knowing that psychologically makes it a lot easier to continue trading week after week, because you're not sitting there afraid that is this day or is this week going to wipe out my entire year. Instead, it's the flip side. Well, if I have a bad week, I know that I can make it back in just a few days or just a week or two, and then be already, out the other end and stacking on more profitability on the other end. So those are some of the things that I look at the kind of the end of each year. It's worth going through your trades and picking them apart. And I like using Excel just because I can go in and be very hands-on. I know there's a lot of great trading platform or trading journals out there, but I've always just been kind of old school and used Excel. So if you have questions, you can drop them in the comments below. Hope you have a great new year. And if you liked the video, give it a thumbs up, and we'll talk to you in 2025.